told you about the EXP stock. It went up again today.
Nice.
The stock market's hitting, buddy.
All right, let's roll.
Yeah. All right.
$30 AMC, let's go.
Yeah, so let's recap. If I'm a borrower, and we talked about the two types of borrowers out there, right? There's the ones who are prepared to meet with a loan officer and the ones who you kind of have to handhold a little bit to get the documents. If I'm trying to be a prepared home buyer, give me the list. Like, what do I need to have in a file ready to go for you?
Cool. So the biggest things there are, well, one is going to be your income documentation. So your W-2s, your tax returns for the last 2 years, 1040s, unless you're self-employed, and then that's a totally different thing. So if you're self-employed, then we're obviously going to need your personal, your business, unless they're one and the same, and then P&Ls. Okay, those are the main ones. From there, we piggyback into pay stubs.
Okay.
Definitely 30 days worth of pay stubs, a full month. So if you're paid bi-weekly, we need 2. If you're paid weekly, obviously we're gonna need 4 to 5.
Gotcha.
Otherwise, we'll collect 2 months worth of bank statements to show 60 days worth of seasoning for your funds for down payment. Now, the beautiful part about some of our bank clients is that if they bank with us, then we can pull those things internally, make it a little easier on the borrower. Because I'll be honest with you, probably the hardest thing to get out of borrowers is the bank statements.
Really?
Believe it or not. I don't know if it's just because they don't necessarily want to see what they're doing on a day-to-day basis.
See that they went to McDonald's 3 times yesterday?
Speedway 4, exactly. Yeah. So that's one of the deals where, when we talk about that with our clients coming in, I say, we're gonna know everything about you financially when it comes to this. And it's not a judgment thing, it's not whatever. We just need to know that you have the funds coming in. And if you have like a borrower that's on Social Security, we want to see that deposit that says Social Security, federal government. So.
Yep. So you've got income documentation, you've got pay stubs, you've got bank statements. Anything else?
Driver's license is definitely a key one. And then those are the nuts and bolts when it comes to approval. Now, as we go into the process, then obviously we're going to need a homeowner's insurance quote for the potential home that you're in. If they have another mortgage or another property, we're going to have documentation on that via mortgage statement, via the homeowner's policies that go along with that, or the agent's name and number. And typically my processors, Kim and Kim, will give them a call.
You have 2 processors and they're both named Kim?
Both named Kim, Kim squared. And we had Courtney, and Courtney has moved on. She was a great asset, but she's younger, got out of college and decided to go a different way. So.
Yeah, cool. What else? So what does a mortgage actually say? Right, so there's a big thick document. You're
about 20 pages, and in a nutshell, it says you're going to pay this back. You're not going to start like a junkyard on your property. You're going to maintain your property, and ultimately, if you don't, one of our title agents says, "Pay us, we love you. You don't pay us, we don't love you anymore."
Right.
And then we're coming after you.
Right. And
then foreclose. So essentially, in a nutshell, it says pay your bills and maintain your property. Keep it up and nice.
Ultimately, that mortgage sounds to me like, hey, we're in a partnership here. We're going to give you a boatload of money to go buy this house that you don't have, and you're going to pay us back. And for that exchange of that partnership, you're going to pay us interest.
That's right.
Right? And you have to make sure you keep the property up, and you have to make sure you're not doing anything dangerous or hazardous.
Illegal.
And if you don't pay us back, we're going to file a foreclosure notice, and we'll legally take the property back and sell it to get our money.
That's right.
So
that's right.
That's the not so sexy part of it. But at the end of the day, it's kind of cool that somebody will hand you $200,000, $300,000, $400,000 in money so that you can go buy something and pay them back
and
later.
Make incremental payments on it to essentially live the American dream.
Right, the American dream.
Yep.
Awesome, man. Well, thanks for explaining that. That's cool.
Yeah, no, it's absolutely. And like I said, when I bring folks in, what we'll do is we'll just kind of sit here, and I just typically will take notes or have my laptop and have that conversation that we talked about on the podcast, And sometimes they'll bring their family, whether it be, a first-time buyer, they might bring their mom and dad who's been in the process before. And that's another conversation, because when you are in those dynamics, I don't know if their parents have purchased a home within the last 10 years.
Yeah.
So many things have changed from then. And then I'm ultimately educating an entire room.
Well, that's the thing too. It's like when we have parents that come along with us on showings, ultimately what I want to see is if mom and dad are going to be involved in the home buying process, I love it. Like, let's get the whole family involved. But, you can't just be there for part of the process. You have to be there for the whole thing, because as we're out there looking at houses, it's like, okay, you can't just come to the good ones, because you'll pick those apart. You got to see the bad, the good, the ugly. You got to see all of it. You got to be along for the ride, because if you just show up to the one that knocks everybody's socks off, you're going to pick it apart and you won't be able to compare it properly.
Right.
And same thing for you. It's like, well, you know, bringing parents in, now you're able to educate everybody around them.
That's right.
And now they got a support staff of people around them, as opposed to people who are giving them false information.
And it gives them a peace of mind that they know that their kids are in good hands. You know, I have a really close friend of mine who's going through the mortgage process right now, and her mom is her insurance agent. And her and I had a 30-minute phone conversation the other day when I was driving Christian to school. And, you know, she is going through the building process herself. And she's like, well, my loan officer didn't really do this at X institution. And I was like, well, I want to make sure that you know what she's getting into, because you're just as involved in this as she is, being her parent, and ultimately helping her through this process. So
it's more of a consultative process than it is just a transactional thing.
Yeah, absolutely. And that's the best part about the job. And it's what I like the most, is really you get to teach these people what they're getting into. And then, I use this analogy every once in a while, and it's like an airplane flight. So we're taking off, we're going from destination A to destination B. There might be a little bit of turbulence in between, but we're going to walk through that. We're going to get through that together and ultimately land. And when they land, it's here at this closing table. They're signing, they're getting the keys, and they're just as happy as can be moving forward in the next big step in their life.
Sweet. Oh, let's talk about closing costs for a second.
Oh yeah, that's one thing we didn't touch on over there.
Yeah, so when it comes to closing costs, not only am I going to have to show up to the closing table with my down payment, we have to pay the insurance company, we have to pay the lenders and that. So let's break that down for a second. What all is included in closing costs?
Absolutely. That's a perfect point. It's one thing we didn't touch on. So there's a misconception when it comes to closing costs, because you'll see other lenders out there that quote like a certain flat rate, $500, $250, $1,000, whatever it might be. But all those things can be hidden behind the scenes in one way, shape, or form. How we work at the bank here and with our investors on the secondary market is everything is disclosed, because it has to be. We factor in a few different things. So one, there's going to be our fees for origination.
No loan origination fees.
Underwriting and processing is typically what it consists of, and that's to pay the ladies and gentlemen in the back. We also have title fees. Title fees are a big thing. Lender's title insurance is a mandatory policy that protects us on the property in case some type of lien comes up. You're not going to try to stick it back on us, right? And then the title attorney is going to have fees as well, ultimately to do the title search, the processing, the closing protection letter. There's all these different little miscellaneous fees that go along with what they do in their office, totally separate from us. But you're able to shop that. We use 360. We use Kentucky Land Title. There's Priority Title. There's American Home. There's all the different kind of people. And it really all just depends on the relationship. In a nutshell, they're all about the same price. So there's that. Then there's your first year of homeowners insurance up front if you're going to escrow. Anytime you put down less than 20%, you have to escrow. It's just to make sure that the property gets taken care of and that the taxes are paid on time. And with that comes an allocation for taxes. So in Kentucky, taxes are paid once a year, and in Ohio, they're paid twice a year, and then they're in arrears. So we won't talk about Ohio because it can get kind of confusing. But here we are in August. If you were to purchase a home right now, your first payment wouldn't be until probably October, when taxes are due. So we're not going to have to collect as much taxes up front, because the seller of that property is responsible for up until that portion until you take over. Now, with escrow, each and every payment that you make, therefore, going forward, you're going to fill that account for next year. And the reason why we collect that first year of homeowners insurance up front is that way the property is insured. So you've got a tax allocation, you've got insurance, you've got title fees, and you've got origination. The only other thing on there is going to be an owner's title policy, which is essentially protection for the new buyer against any liens that may pop up on the property in the future that have nothing to do with that property.
And that's optional.
It is very optional. It is optional.
What's not optional is the lender's coverage. The owner's policy is optional and highly recommended.
That's right. Just, you never know what's going to happen. You know what I mean? And it protects you for the entire duration when you own the home. Not as long as you have the loan, but until you sell that property.
So let's say the market average for a house in Northern Kentucky right now is, let's just call it $250,000. It's probably a little bit higher for that. $250,000. If I'm looking at closing costs, right? You've got loan origination fees, you've got title fees and title insurance. First year's homeowners insurance, you've got escrowed taxes, and a few miscellaneous things kind of sprinkled in there, right? Ballpark. Give me a range. Like, what are we looking at for a conventional 5% down to 20% down loan?
I would say, when it comes to fees, I usually say like 1% outside of escrow.
Okay.
So that's $2,500. You factor in another additional $2,500 for escrow. You're probably looking at anywhere between $3,000 and $5,000.
Okay.
Now, you get up into the higher priced homes, the $500,000, the $600,000 homes. You could be in the upwards of $10,000 easily, just depending on the taxes and how much we allocate.
Right.
So people kind of get sticker shock on that, and it's like, whoa, 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 whoa! I didn't expect this. Plus my 5% down payment. Well, it's mandatory, one, and two, it's not necessarily a cost that I'm charging you to do this loan. Yeah, we have our origination. The bank gets paid on the back end when we sell the property.
Yeah, the bank is only a small portion of that.
A tiny, tiny bit.
The rest of it is insurance and fees that are included in doing the actual title search and taxes.
That's right.
Yeah.
That's right. And to make sure that you're in compliance and you're not screwed at the end of the day when the tax bill comes and you're short on your escrow. Because then all of a sudden you have to come up with another $1,000, $2,000 to make sure that you're right. And you're like, wait, Charlie, I thought you allocated for this. Well, that's the reason why it's there.
The other thing that I think is important too, and if I do escrow or what have you, is when I get my financing done, I like to look at the tax rate for what I'm paying for the house, because likely the house sold previously for a lower amount and it's probably assessed lower. I look at the tax rate and say, okay, well, if I'm buying it at a higher price, I want my payment based off of the new taxes, so I'm more likely to get a refund than I am to have to cut this big check and raise my payment up another $500 a month.
That's right, and that's what I do on my pre-approvals. So I'll take that calculation, divide it by what the actual purchase price is now, because eventually it's going to be reassessed to that amount or very, very close.
Right.
And mostly that amount, and the counties and municipalities are going to get their money one way or the other. Now the title company does that as well. They may have a different calculation, but I take that higher one up front and say it's $1,600, and that way like expect that to be there. It may not be there your first year, but it's coming.
Right.
Yeah.
And it'd probably be better to have a mortgage borrower that gets a big check back the first year than to have somebody who is making a low payment and then their payment goes up by $700 the next year.
That's right. That's right. Well, we had that happen a lot last year when independents raised their taxes. I had so many borrowers that we refied come back like, whoa, I'm short. I'm like, we didn't raise the taxes. You closed before then. You know what I mean? Like,
right.
I'm sorry.
Call the city.
That's
call
right.
the county. Yeah.
That's right. So that was just right in the middle of summer last year. Couldn't have come at an opportune time. But yeah, so back to closing costs. It's not that we're charging you an additional $10,000 to do this, or $5,000 to do it. It's a cumulative amount that puts you in the position to go where you need to be. So I always tell borrowers, if you're looking to put down 5%, to maybe factor that in. And that's why I ask, like, how much are you comfortable putting down? Okay, if you got $10,000, you may only be able to put $5,000 down.
Right.
Well,
and that's the thing. It's like you've got all these fees that are included that need to be paid at the time of purchasing a house. The bank's fee is only about this much.
Yeah.
And your job is just to make sure everything else gets paid when you close.
That's right. That's right. And where banks make their money is selling these loans on the secondary market.
Right.
We portfolio a lot of our products here that we do the servicing on, particularly construction loans, land loans, some one-off situations with adjustable rates, and different products to get people to where they need to be in a short amount of time. The bulk of our stuff goes to our investor portal. We have 3 different investors that we use, and once it goes to them, they buy the paper from us, and then they do as they wish with it. And that's where Heritage Bank or any other bank is going to make their money, not specifically from you at the closing table writing me a check.
Right. And when you say investors, you're talking about loan servicing companies.
That's right.
People who actually are collecting the money and
large institutions that they buy these things in bulk and they take over the servicing rights. And ultimately, that's where they make their money, is from servicing your and I loans.
Right. Got it. Cool, man. Well, thanks for the tour of the office.
Yeah.
And breaking all this down for us.
You know it.